What's up, traders? Looking at a nice long opportunity here on the euro dollar right now. I'm going to go ahead and open up a live trade with you guys. This trade is based on what 90% of my trades are based on, which is a major level of structure looking left and a nice price action pattern I'm starting to see develop here on the euro dollar. I'm going to go ahead and put this in as a market order. My stop loss, I already know it's going to be 18 pips. My target, I'm sitting here looking at this as a 1.4, but what I'm really going to do is manage this position on the way up. Once we get to that 24, 25 pip target, I'm not going to have necessarily a take profit there. I'll be moving my take profit up and moving my stop loss up to break even at around that point, and then continuing to see if we get some type of big reversal out of this market so I can get more than a 1.4 to 1 risk reward out of this trade. For my risk, I'm going to be risking 1% on this trade. And now we're ready to go ahead and click the buy button. There we have it. We are set up for this opportunity, and I will keep you updated as this trade plays out. Win or lose, I'll show you the results and we'll talk more about the analysis behind it. See you in a second. After about a decade of trading, I've learned a lot from other mentors, and I've added to that to develop a way of spotting major levels of structure that move the market that's not only twice as easy as the old-fashioned support and resistance that you've probably heard about before, but that also works 10 times better at least. You just saw a trade we took yesterday on the euro dollar using the exact same method I'm going to be teaching you today. And if you look on the screen with me, I'm going to hit play on this trade, and you'll see that we actually ended up coming up and hitting a 4 to 1 risk reward on this trade in just a few hours. Now, obviously, every trade does not work out like that, as much as I wish it did. But the method I'm going to be teaching you today is something that has provided me with a massive advantage for years. And I know that if you learn it and you implement it into your trading correctly, it will be a huge contribution to your trading success in years to come. And that is why today I'm going to be teaching you exactly how to find major levels of structure that move the market. And if that sounds good and you're not yet subscribed, make sure you go ahead and do so, because we come out with content like this each and every week, and I don't want you to miss it. So click that notification bell. Go ahead and click that like button for me to help out with the YouTube algorithm, and make sure we can get this video to as many traders as possible. And if you're ready, then I am. I'll see you right after the intro and disclaimer to teach you exactly how to find levels of major structure that actually move the market. Spotting major levels of structure that move the market consists of 3 extremely important steps. We're going to start off with step number 1, which is utilizing multiple time frames. Tell me this: have you ever heard the phrase, you never need to try to call the exact top or the exact bottom of any market? It's absolutely true, because it's nearly impossible to call the exact bottom or the exact top of a market. So the reason we utilize multiple time frames is so that our major level of structure does not have to work as hard. Let me draw you a diagram to try to explain that in a better way. So let's consider that this is a major level of structure I see on a 4-hour chart. And let's consider that the 4-hour chart does something like this. Comes down to my level, bounces out like this, and then pushes down. Does that look like a winning trade to you? Well, if you're just using the 4-hour chart to spot your level of structure, to take your entry, to place your stop and target, then this more than likely was not a winning trade. But if I use this 4-hour chart to spot my level of structure, and I go down to a 1-hour chart to get my entry, stop, and target, then this little bounce most of the time will be enough to hit my profit target and to be a profitable trade. So this is what I mean by this market doesn't have to work as hard now. This level of structure doesn't have to be the exact bottom for you to get a profitable trade out of it. We don't need a full reversal. We're using multiple time frames because little bounces on higher time frames can still hit our targets if we utilize lower time frames for our entry, stop, and target. Now let's take a look at how we did this on the euro dollar trade you just saw. So here we are on the 4-hour chart. The market is right here. I decide to look left, find my major level of structure. And I'm going to be explaining why this is a major level in step number 2 and 3 in just a second. Find my major level. And then what do? I drop down from a 4-hour to a 1-hour chart, and I wait on my entry reason. Once I get that entry reason, my stop is small. because we are on a 1 hour chart, meaning my target doesn't have to be way up here. Initially, if you'll remember from right before the intro, my target initially was a 1.4, which would have been hit very easily here on a 1 hour time frame. And that's the reason we utilize multiple time frames, is so that our level of structure doesn't have to work as hard and we're more likely to hit targets. Now let's talk about how. How do you utilize multiple time frames? Well, to do so, what I personally do, look at the top left corner of my screen right up here. I'll zoom in on it for you, and I'm going to go through this really, really quickly. If I'm trading, taking my entry, stop, and target on a 5-minute time frame, then I look up 2 time frames for my structure levels. That would be the 15-minute or the 1 hour chart. If I'm trading the 15-minute chart, I look at the 1 hour or 4 hour. If I'm trading the 1 hour, I look at 4 hour or daily. You just saw that right here. If I'm trading the 4 hour, I look at daily and weekly. That's how I set it up, and that's the way that I personally utilize multiple time frames for identifying levels of structure that move the market. Now let's move on to step number 2. After multiple time frames, what else do we need? Step number 2 in our 3 extremely important steps to spotting levels of major structure that move the market is recency. Recency in terms of time. And if we're looking at this chart, this is going to be the best way I know to explain this. If we're looking at this chart right now, we're right here on this green candle. The candle just closed. What is the most recent level of support that we can see? The most recent level in price that will support this market if it continues pushing down. Now, if you said this level, I want you to keep in mind right now we're in a heavy downtrend, and if we're going to continue that downtrend, this level will break. So here is a really important part to this rule. Never count the level that the pullback, current pullback we're in, started from. So if we're in this downtrend, we have a push down and a pullback. We have a push down and a pullback. Never count the level of support that started the pullback when in a trending market, especially when we're trending down or up, as the next level of possible support. So what do? If we're not counting this level, I'll put a horizontal line on it to make this very easy, then all I'm doing is looking down and to the left to find the next level of support. This level of support was hit on September the 27th. And since then, there is not a level that has been hit by price, that has been reacted to by price at all. So does this count as our most recent level of structure support? Hopefully you said yes, because it absolutely does. And with that being the case, this being the next most recent, that is the level that qualifies for my second rule. I need this level to have a recency bias, to have been tested recently by price, considering that this is the most recent level of structure support that the market will hit. Inevitably, if we continue in this downtrend, then that is a level I'm looking for the market to move from. That is a level I'll be looking for possible trading opportunities out of. And as we've already seen on our euro dollar trade, that's exactly what happened. So step number 2 is to use levels in the market that the market has reacted from recently. Considering that we had our most recent level of support here, that was one of the major reasons I saw this as a level that could move the market. So now let's move on to step number 3. What is step number 3 in identifying levels of structure that can move the market? Step number 3 in this process is strength and frequency. So what would strength look like? It's pretty simple to define, right? Look at this market. Was this level a level that had strength? Well, from it, we started a brand new uptrend. So yeah, I would consider this a very strong level. The level had strength. The way I like to think about it is, did the level push the market around like a bully would push a little kid around on a playground? Not that I condone that behavior whatsoever. It's just a cool trick to remember. And another way you can remember it is, did this level start a new trend? The market was pushing down. This level did start a new uptrend. That's how we identify strength in a level that we're looking for to move the market. Next, frequency. Let's actually take a look at a different trade that I'm currently in on the Aussie New Zealand to identify frequency. Here's our Aussie New Zealand trade. It's currently up a pretty nice amount. We're up about a 3.3 to 1 risk reward on this trade. And the difference here is that this level of structure, yes, it was identified by strength, but it was also identified by frequency. So the same things apply. We were looking at a higher time frame, right? The 4-hour chart, 4-hour level that could possibly move the market. We spotted that. Here we have our 4-hour chart. We pushed the market back. We're also looking at recency, right? So I'll move this out of the way so we can see that if the market is right here, where I'm drawing this black line, where my entry is, and I'm looking down, that's where the market is, right? And I'm looking down into the left, what's the next level of structure this market will inevitably hit if it continues pushing down? Right here, this area of structure, right? And then the frequency, do we have strength from this area, by the way? Yes, we do. We had a market that was pushing down, and now this level created a brand new uptrend. So we have strength. Do we have frequency? I don't need both. I just need strength or frequency, but if we have both, then I'm way more likely to place a trade from that zone, and it gives me a lot better accuracy if I can get strength and frequency out of a zone. Does this zone have a lot of frequency? Did the market use this zone as support and resistance multiple times in the past? And the answer is yes. We have 1, 2, 3, and 4 times the market used this area as support and resistance, making this a level that has all of our qualifications met and a level that is extremely likely to move the market. This is when you would want to see this level and have an entry reason for a lower time frame as a special bonus. Now that you know exactly how to spot these levels, I'm going to give you exactly what I look for in them heading down to a lower time frame. This is exactly why we entered this trade. What do we have? A price action pattern, okay? The entry is super simple. With all of those criteria met, the chances of the market heading higher from a level of support like this is really, really high, at least from my own testing and my own experience and my own trading. It has been very high likelihood areas. With that being the case, if I get a price action pattern like a double bottom in areas like this, then I'm more than willing to take a chance on that trade and at times get some extremely good risk to reward ratios out of trades using this method. Now, if you enjoyed this lesson, then I have some really good news for you. I have a main goal for 2021 to help to create at least 1,000 profitable traders. And because of that, I'm going to start running some pretty heavy discounts on the EAP Training Program, which is our flagship mentor program. In this program, you will get every strategy that I use on a daily basis. You will get training on risk management and discipline. You'll receive what I call priority email, which means that anytime you have questions about trading or the course, you send them into a certain email address, and it's me personally that responds to those for you. You'll also receive 3 to 5 email alerts per week of trades that I'm placing based on the strategies that you're learning in the course. So check out this short clip, and if you're interested in that, the link is in the description. See you guys next time. There are 3 main ingredients that anyone must have in order to make money trading, and they're on the board behind me. Let's take a look. First off is a strategy that makes money over time. Second, we have a risk management plan that keeps you from blowing your account, losing too much on a single trade, and from being hyper emotional while you're trading. And third is staying disciplined to those 2 parts of your trading plan. With these things accomplished, your chances of making money as a trader skyrocket. And I know there's a lot of you who are probably having trouble with one of these aspects of your trading. That's why I wanted to let you know that I'm looking to work with a small group of dedicated individuals on accomplishing your trading goals. Throughout this process, I'll be teaching you strategies that make money over time, how to create a risk management plan, and how to stay disciplined to those things. If that sounds like something you're interested in, then the link for that page is in the bio, or you can follow the link in the description of this video. I look forward to seeing you there.